panic, sell! Sell everything, take it. It's crashing, guys, it's crashing. This great stock market crash of 2021 is here. Batten down the hatches, sell your kids, hide your wife, because they're killing everybody out here. Welcome back, everyone. My name's Jesse Tyler Ridgway, and oh my God, we're jumping into the meat of finance here. We're talking about the stock market, the big crash, the economy, all the swirling complexities around that. I'm gonna do my best to Eli 5 and explain it to you as if you were 5 years old, which some of you guys might be because apparently YouTube is opening up the platform to underage children, which I thought that's what all the viewers on here were. So I don't know. But guys, if you're clicking on this video, don't worry, don't panic. Guys, zoom out a little bit. Look at this 6-month chart here. Guys, the stock market, the Nasdaq's just down maybe, 5%. No big deal. It actually is a big deal. This doesn't happen all the time. But hey, look at the crypto 1-month chart. I mean, that's down 25%. Get on our level, stockies. But guys, there's been a lot of rising concerns that the stock market is overinflated. It's trading like 22x earnings and it's just fitting to crash, and whoever's invested right now is going to lose everything. If you bought any stocks within the last 3 months, you're going to probably blow it all. It's going to disappear and it's going to go to zero. So you probably should sell right now. I'm being sarcastic, guys. Do not sell. Don't panic. Guys, look, let me cheer you up. I know it's been a crazy year. Almost been 1 full year since Black Thursday, or the day that like stocks and crypto, everything dropped by like 50% and everyone, it was dark times. On top of the fact that global pandemic was announced and that now over 500,000 people have passed away. It's been pretty dire, but we have good news suddenly. The vaccines are getting rolled out tremendously. We'll be up to 130 million vaccines rolled out as of the end of March. That's probably almost half the American population. We've been seeing COVID, you see the graph here, we've been seeing COVID cases drop dramatically. We're under 100,000 cases a day, and we keep slicing that number up. And we're also about to be receiving another stimulus check, $1,400. It's like a $2 trillion stimulus package, thanks to Sleepy Joseph Biden, Sloppy Joe. Do I gotta bring up the leg hair again just for well, the leg hair was shining off her forehead and what? We have fun here, guys. But we're all getting some money, and that means the Fed, the money printer that goes burr. And guys, if you need me to elaborate on any terms or things in the comments below, let me know and I can articulate this better. But basically, a lot of Americans are still struggling. There's still like 10 million people unemployed, which is not good. And so the government, or the Federal Reserve, they're teaming up and they're like, yo guys, we got to print more of the US greenbacks, more of these. They're printing lots of, that's how I have all these. They keep printing. I have a printer here. I'm able to if you guys want some, subscribe, guys. Subscribe to the channel. And we're all gonna get minted. I'm gonna print off more of these and send it to you in a gift bag. What were we saying? Oh yeah, the end of the entire stock market. So things are looking great, honestly. COVID's improving. The Federal Reserve is printing more money. We'll be receiving checks. Hopefully, look, if you want me to do a separate video really breaking down the next stimulus package, let me know, we can do that. A lot of people are gonna get more money. Also, the Federal Reserve is gonna be buying more assets, so they're gonna be buying stocks and stuff. And so the fun will keep going, and that's what we've seen a lot of this year. The Fed keeps printing money and stocks only go up, and there's just lots of money. But now here's the bad side. Here's what everyone's growing concern has been, and that's inflation. People are even saying hyperinflation. It's about to be like, people are saying, what are they saying? People are always saying something. They're talking about, what is this, like Germany back in the day, where like, or maybe even like it's gonna be like Zimbabwe, and you spend each dollar bill. I'll show it here. I thought it was crazy. People used to send me Zimbabwean money back in fan mail. This dollar bill, it's not even a dollar bill. It looks like Monopoly money, but this one piece of paper is worth like 100 million. It's like 100 million of their currency, and like that buys you like a loaf of bread. I know it sounds ridiculous, but that's what happens when they keep printing money. Basically, inflation is where your dollar has less spending power. So like, imagine you go to the grocery store and a bag of Doritos used to be a couple bucks, now it's $6 for a bag of Doritos. Your dollar has less power to buy a house. It's not gonna cost a $500,000 house. is now a $700,000 house. It sucks, especially when people are earning the same amount of money. And that's why you might see a lot of talks to raise the minimum wage to try and keep up with this inflation that's most likely going to occur. Now, I've seen a lot of varying theories, and guys, understand that everything I say here is just my personal opinion. I'm trying to be entertaining and throw some logic at you. But really, for anyone who claims to know what's going to happen with the stock market or what's going to happen with the economy, it's all just guesswork. I mean, a lot of people, as we were recovering most of this year, thought we were going to crash even lower, and that never happened. And a lot of people bet billions of dollars on it. Heck, I was even in that camp. I thought this fall the stock market was going to crash because I thought COVID cases, deaths were going to rise, and they did tremendously, but it had no impact on the market. The stock market, in a lot of ways, is used as a tool to predict what they think the future of the economy and these companies is going to look like. And everyone's banking on the fact that things will be better in the future, and they are. Now, looking at the 5% drop at the NASDAQ, the S&P 500, we've been seeing a lot of volatility, basically where the graphy goes uppy and downy a lot. I'm trying to break it down for you guys because I know a lot of my fans. Anyway, so it's crazy. It's volatile. It's like Psycho Kid ripping his clothes off. So that's not a good look. You know, people get a little spooked from that, and they're like, I'm not keeping my money here. It's a little too much. And that's why a lot of people don't really mess with cryptocurrencies. Like when you see big ups, that's exciting, but you also kind of want some stability if you're putting a lot of money in, because what goes up can come down just as quick. So it's a lot. Now, why we've recently seen this drop are for a few different factors, in my opinion. For one, it's been ridiculously high as it was, and people take profits. I mean, if you 2x or 3x your money in a year, you probably want to take it out and buy yourself a yacht or something, or a toy yacht. There's also this other factor, and you might see a lot of headlines about this, and I want to try and break this down properly. We're talking about treasury bonds. What is that, you might ask? So a bond is basically a loan, except you as an investor in a bond is actually the one providing the loan. There's a few different types of bonds, and I'm going to use loans and bonds interchangeably because I feel like calling it a loan is easier. Now, understand, guys, in finance, there's a lot of terms that I don't think are necessary. Like, people are throwing some complicated terms at guys. You're just confusing people. And maybe that's part of it. They want a high barrier to entry so you guys don't make a lot of money, because that's what the rich people are supposed to do. You all aren't supposed to know about this stuff. You can't tell all the secrets. Messed up, guys. That's why we're here. So there's a few different types of bonds. There's corporate bonds. That's through a company. There's municipal bonds, government bonds. There's all kinds of bonds. Bonds. James Bond, actually. You can lend him money. That's how he has so much money, because people lend it to him. And then he has to kill to pay it back or something. I think that's how it works. Or something involving women. Lots of women. They're nice. So what you can do, say you had $100,000 and you're like, yo, this is a lot of money. I don't want to risk it in the stock market. I'm not doing cryptocurrency. I already have a house. What do I do with this $100,000? I don't like risk. I want to be safe with this. You can buy a bond. So basically, you're taking that $100,000 and you're giving it to, say, a corporation or the government, municipality, whatever it is, to then use your $100,000. And what they'll do is, over the course of a year, you can get a 3-month, you can get a 1-year, 2-year, 5-year, 10-year bond. Basically, over that time period, that entity will be paying you back with interest. And that's where you get a bond yield. And that yield is basically just the interest rate. So you could buy a, say, 10-year bond, so your money is going to be lent out for 10 years, and you could earn 2% per year on that bond. Now, it's generally a safer investment. A lot of people, if they're trying to avoid risk, they're trying to manage it, they'll put some money in the bonds, and especially if you think the economy's in bad shape, you might buy some bonds up because it's a safer option. You're going to protect your wealth. So hopefully you're keeping up with me. I know it's a little tricky, but this is where it's going to get a little trickier. So a lot of people's concern is inflation, right? Everyone's dollars are not going to be able to buy as much. They're not going to have as much buying power. People are looking at the bond yields, how much interest you get paid for loaning that money out. They're looking at that as an indicator that the economy is doing better, which is causing people to sell their stocks off. And then it's like, wait, wait, huh? So there's an inverse relationship here. It's the opposite. So when bond yields go up, how much interest you'll get on your loan, how much money you'll get back. Some of which, guys, if you got a municipal bond, you don't have to pay taxes on it. And you guys know how we like to talk about taxes on here. There's also Puerto Rico, remember that. You can watch that video if you haven't, about Logan Paul. When people want a safe investment, they will buy bonds, which, because there's such high demand, the bond prices will go up and the yields will go down. So you're not going to get as much of a return because everybody's jumping into this. There's plenty of loans to go around. There's lots of bonds out there. A lot of people want to be safe. So maybe at the start of the pandemic, people were buying some bonds up, a little freaked out, and the yield was super low. However, what has just been transpiring recently, the bond yields are going up, which, like I said, it's the inverse, which means bond prices are going down. So that's right, Jimmy Neutron Brain Blast, that is freaking people out because that means people are not going into bonds, which once again is the safer investment because, hey, things are getting good. It's a sign that they think the economy is going to be doing better. They're pulling out of their safer investments, which has caused a little ripple effect because smart traders, investors know this, and then they're like, okay, I'm selling my stocks, and specifically a lot of these value retail traders stocks, the Robinhood crazy stocks. We could do a separate video on all that. I know we talked about GameStop, AMC before, but things have been recycling. A lot of people are selling off the really overvalued tech stocks. They're like, all right, we can pull out of here. I think, let's start to rebalance the portfolios and move some money around because the game is changing a bit. The stocks selling off, pulling out of bonds, that means more US dollars are circulating. There's more dollars in the economy, and pair that with the stimulus that's coming in just a few weeks, hopefully, barring it passes. I mean, it seems like a surefire thing. Suddenly, we have trillions of dollars floating around. And I'm sure you guys have seen the graphs, hopefully, that most of the money that exists in the United States right now has been printed within the last year. We may see some inflation. We've also seen some of the commodities go up in price. We could see gold, silver, oil. We might see some of the old stocks that got trampled a year ago when COVID first started. Now the economy is improving, we're going to see those maybe continue to rise. And to quell the inflation concerns, we also heard from the Fed. The Fed chairman Jerome Powell basically said, guys, look, the recovery is far from complete. Understand that don't have to worry about inflation. We're still working on the stimulus. Don't worry about rising interest rates at any point, at least probably till 2022. It was very reassuring, and some people call BS, whatever, but over the course of the last year, I'd say they've remained relatively consistent and on top of things as much as they can be given this scenario. Everyone has opposing viewpoints here. But I actually believe it. I think things are just kind of working themselves out. We just saw a little bit of froth get cut from the top. And we're going to get this stimulus, and it's going to feel probably pretty similar to the last few months. However, COVID's going to be starting to dissipate a bit, the vaccines and all good things, and might see some of those tech stocks funnel into value stocks. And just a real quick blurb about cryptocurrency. I think we're going to start to see a slight consolidation and recovery as we get closer into mid-March and the stimulus. So what does all this mean, guys? I know we just talked a lot. I'm trying to explain different factors in this scenario. I also didn't mention taxes too much. Biden, I know, has some proposed tax plans, which could cause tax hikes for a lot of high net worth individuals. It could change the trading long-term and short-term cap gains tax, and we might see hikes across the board. And it'll be interesting to see if that happens. It'll be interesting to see the interest rates, basically, how much you're gonna have to pay on any loans, mortgages, things like that. But I honestly think we're in for more of the same. I think this is just temporary pullback, and my advice to those that are in the market, I would stay in, maybe consider rebalancing your portfolio. Maybe don't be so stacked into Tesla or Facebook or Amazon. Not saying that these companies won't do well, it's just that they've gotten pumped a lot. Or at least stick around till the stimulus drops, people buy in more, and maybe think about rebalancing after that or around that time. And for cryptocurrency, or just if you have money on the sidelines and want to invest, buying on a big dip like this in crypto, 25% down, just think if it recovers back to where it was, it's 25% gains. You never know. Or with the stock market, 5% down, just a return to the high that we saw. Nice 5% gains depending on the stocks. And guys, we might get to the point where I am one of those channels that'll give you stock tips, specific insights into cryptocurrency markets. Let me know in the comments below if that's something you're interested in. Let me know if you learned something today. I know it was a lot, and I hope I did some justice. I'm still trying to get my wings flapping here because you know, we're covering a lot of very heavy, broad topics. And I want to make sure you guys are informed and actually understand what's going on. Guys, drop some likes in this video. Make sure you subscribe, guys. We got some awesome videos to come, including one of my stock picks in the near future. I'm going to do a whole video on it. But guys, call me when you're serious. Let's get minted. Stay safe out there. There might be some more volatility rocking the Casbah. Just make sure you're never investing more than you can afford to lose, and you're doing your research. Don't just take it from me. Cacao.